Some negative calls on this today because of the disruption. Some argue that happens when you have an abrupt CEO change. What's your view on that?
Well, obviously this was not expected, so there's no part of this that could be good news. But you do have a co-architect of the plan now taking over in Chris Kędzierski. Chris has obviously been managing the most important market, not just in the size of the market, but also the turnaround. They went through a lot of change in the last few years, and the U.S. went through some pretty tough relationship issues with franchisees because they did so much change at once. But there does seem to be some recovery going on in the U.S., both in cash flow and franchisee relationships, and as we come on to this promotion.
The Journal, for example, in their story sort of frames it as, okay, maybe the succession itself is not an issue, but it's coming at a time where rivals are right on their heels on some critical day parts. Does that make it more important?
Well, the good news about that is that you have rivals showing that you can do some things. You can grow breakfast, certainly. There's the chicken wars, as we all know, and the fact that there's been some demand creation happening in the industry. The industry is doing over 4% comps right now. So very strong results. McDonald's has outperformed generally, but that has compressed lately. McDonald's just fired their head agency for advertising, so there's a sign that they're going to get going with a new type of advertising direction, plus signs that they're going to get after breakfast and chicken in 2020. So a lot of blocking and tackling. Plus, they're way ahead of the other guys when it comes to the reimaging of the base. So they're over 70%, well, they're about 70% done at the end of this year. So that's the good news for McDonald's, is that their assets are in great shape if they can just make a marketing push in 2020.
And yet McDonald's shares have still trailed other restaurants this year, up about 9%. So do you think that the company actually needs more of a strategic shift if they are going to go through a CEO change?
Well, they've gone through so much change that they've let other things fall by the wayside. So the reimaging, the technology investments, the launch of delivery. Remember fresh beef? They had a sort of a failed value push with the 1, 2, 3. All these things caused disruption. Now it's going to be back to basics with throughput on drive-through, better marketing, a push on some of the basic type of areas of the menu like chicken and breakfast. And these are things that were essentially orphaned, but they were hard, heavy lifting. That's behind them. So naturally, there should be a shift that's going to happen, and it should happen, whether Steve was there or Chris K's in charge.
When do you see that inflection actually taking shape?
Probably the first quarter of 20. You know, we're going to see a lot of this stuff happen then. The big drum roll for the street is we're also lapping a lot of the check growth that happened, which was lapping the early 2018 launch of the 1, 2, 3. So the bottom line is it looks like tough comparisons, but our feeling is that they should be able to sustain at least a 3%, 3.5% plus comp into 2020, which should ease some of the fears out there, just basically because of some of the better blocking and tackling around throughput and the innovation in advertising.
You mentioned marketing, and of course they still have open spots in the chief marketing officer and in the communications division, which some argue will let Chris sort of have spots to fill by convenience rather than having to reinvent the team. But I'm watching the shares here, David. I mean, some were wanting it to defend 190. Do you get more interested under that level?
Yes, and we're interested here, and one of the reasons we are is because of free cash flow. The CapEx is going to be coming down through into 2021. You're going to have the CapEx coming down under a couple billion, and if you put a 4% free cash flow yield on that, you get over $230 a share. So this thing, by the end of this next year, should be doing well. If the comps even are pretty good, which would be in that 3.5 or higher, the valuation should be higher from here. On the advertising front, yes, they need to hire somebody in that global chief marketing officer role. And the other thing that's happening is you're getting this new head of the U.S. coming back to the U.S., Joe Erlinger, and he's an old McDonald's guy, so he actually might bring some improved bedside manner to the franchisee relationships, which could actually help the U.S. as they do this new phase.